Well, away from the glitz and glamour of CES, semiconductor makers are bracing for chip market carnage. Reports surfacing that Samsung could be taking a beating from falling chip demand as supply chains untangle and consumer demand eases up. Memory prices are a key area of focus and, of course, are critical to the South Korean giant's bottom line. Meanwhile, a report from Bloomberg indicating that China might be putting on hold plans to invest in its domestic semiconductor industry. Now, we know that this was a big announcement that China made with this attempt to sort of rival what we saw with the US chip industry. But now when we look at things like subsidies, when we look at the cost that zero COVID has had on the economy, now instead focusing on homegrown chip makers instead of now trying to rival the US and others.
Yeah, we should point out this is a report from Bloomberg that's out there, not an official policy that's come out of China. But it is worth noting when you think about where that focus has been, to your point, Rachelle, it has been about huge incentives for these homegrown chip makers. That hasn't necessarily borne fruit in terms of their ability to compete on an international level. And so this report from Bloomberg essentially suggesting, maybe there are other ways that the Chinese government, from a domestic standpoint, can support their players, including potentially bringing down some of the costs of materials for those chips. At the end of the day, though, I mean, China as well as the U.S., because we have sort of framed this in a two-track competition sort of set. And at the end of the day, it is about China wanting to compete with the U.S. economically as well as from militarily, with the chip sector really at the core of it. So it's going to be interesting to see how that all pans out. But Samsung report there, kind of interesting to me, Rachelle, because it does jive with what we've heard from other semiconductor companies who've said that the demand, especially in PC sales, that's really dropped off. And when you think about where Samsung makes 50% of its profit, it is in NAND and DRAM chips. And that's where they go in. And that sort of points to kind of the slowdown that we've seen in the chip sector.
And you have these companies really essentially caught in the middle. You have the Nikkei reporting that Dell plans to stop using China-made chips by 2024, telling suppliers also that other made-in-China components are going to be pulling back on that because they're really stuck in the middle of what's happening between Washington and Beijing. And then we also saw that former Samsung executive turned lawmaker, Yang Jianke, said we're in a chip war. They're really stuck in the middle here between the US and China, saying that the technology supremacy is a way that our country can take the lead in any security-related agenda, such as diplomatic and defense issues, without being swayed by other nations. So even beyond the chips themselves and really trying to grow their economies, there's also this political push and pull for some of these countries and companies stuck in the middle as well.
Yeah, I mean, that's something that we've talked about, right? Where the U.S. is coming out very hardline against China and those chips, where do these countries fall? A country like Japan, for example, has really sort of at least publicly made it clear that they will fall in line with Japan, I mean, with the U.S. But South Korea has been a little more hesitant, largely because their biggest player, Samsung, is one of the biggest players in terms of chip making globally. But it is going to be interesting to see at the end of the day, where things fall, because the U.S., maybe not explicitly, has said that they believe that these countries need to pick sides at some point.
It's true. We're certainly seeing those allegiances start to take a bit more shape as this develops.